Hello, my guys, my people, my friends. You are now friends and family because we run the same channel together. This channel is not for me, it's for all of us. All right, okay, I'm here again, and actually, this is a baby channel, and be it baby, be it mature, or whatever thing be it is, I'm here to discharge what I know, what I have, for free of charge. And I'm telling you, what you are going to gain from this platform, you will be very happy and you are going to love it. All right, this is my first strategy I'm releasing. This is my second video on the channel, but my first strategy I'm releasing. I'm here for you to give you a bomb strategies. I'm going to discharge everything that I know, how this strategy is going to be very effective for you. I'm going to make sure I respond to all comments, ask questions, ask explanations, seek for whatever you think you need to know. I'm here to assist you. I'm here to help you. I'm here to give it out to you for free of charge. All right, okay, this strategy, now I'm going to tell you how it works, the setup, the do's, the don'ts, and other things that you have to combine in order to make the strategy a very sweet one for you. All right, okay, all right, I'm having like how many moving averages? 1, 2, 3, 4, 5, 6. The reason why I'm using moving averages is because many people are still learning how to identify their trend lines, how to draw trend lines, how to draw support and resistance, and even their price action. So, but there are some things we have to put together. There are some things that when you understand their methodology, you can combine them, and it will reduce your stress. It will reduce. The reason why I use the word reduce is because price action is very important for you to know. It's very important for you to know how to draw support and resistance. Is very important for you to know, and your trend lines, your W, your M, your head and shoulder, inverse, whatever. But that is, by the way, there are some things that when you know them, and if you obey their rule, you may not really concentrate on those ones, but it's going to be an advantage for you if you know them. That is the balance. All right, now I'm going to use moving averages. We all know that moving averages has to do with the past event on a particular trade, on a particular chart. Moving average 65 will tell you, okay, past 65 days or past 65 candles, something like that. So it's now going to depend on whichever platform or whichever time frame you are using is. So that is how it works. The trend at which moving average 50, for example, the trend at which moving average 50 is going to work on 1 minute time frame. It's not the same way it's going to work on 1 hour time frame. It's not the same way it's going to work on weekly time frame, daily time frame, but the same principle. Are you getting me? Excuse me. But the same principle. Are you getting me? Okay, what am I trying to say? Now this is all the, okay, let me just start so that I will not take too much time. See, I don't like shooting or making my video, and my video is having this long what's this called, having this long minutes. No, I don't like that. I don't like that. So because of that, I'm going to give you some things that are very important. Chap. Now the setup for this moving averages, before I tell you how they work, the setup, let me just show you. Let me show you from here. I know you know how to go to our chart. You click on your chart. How to go to our setup rather. You click on your chart. You click on this F. So the first moving average you are installing. See, all you have to do is take your pen and paper, then pause this video, screenshot this thing. Are you getting me? Screenshot it. When you screenshot it, write all this setup somewhere, because they are the one we are going to use to determine our entry period. Okay, see, this is the first one. Period 25, shift 4, method linear weight, apply to typical price, high low close 3, style 4. Then this one should be, I don't have, see all those color thing there. Let's call this one it looks like green, blue, no, greenish blue. Okay, that's by the way. Let's just call it uh uh deep, no, light blue. Let's call it light blue. I know it's green, but let's call it light blue, whatever. Big. All right, so the second one, 50, period 50, shift 1, method smooth. Please, the method and the apply to, please take note very well, take note of them. Apply to weighted close, high low close, close 4, whatever, star is 4. This one is blue, deep blue. Okay, our third moving average, period 100, shift 1, smooth, method smooth, apply to it close. So just screenshot this black, then we go back. Fractals, these fractals, I don't want to tell us, because of this video with these fractals have some logic things. They have some things they do for you that we actually make our trades to be a very clean and sweet one. Well, just add it in case if I will just touch one or two things on how fractals work. I know that we will part 2 of this video, and before I will release part 2, I want to make sure people already got one or two things of part 1. No, if there is no positive this on part 1, I won't be happy. I'm telling you, I won't be happy. I want comments if it's working or it's not working. I want comments. When I see comments, that will push me to discharge more things that I want to do. Are you getting me? If you think this channel will be okay for you to learn, so subscribe. And if you think it's not going to be okay, shall leave your comments and be coming back anytime you think you should come back. But subscribe now at least. All right, subscribe. In fact, subscribe now. Okay, that's fractals. By the way, the other moving average, period 5, shift 0, method smooth, apply to weighted close, air low close 4, screenshot everything. Then the other one, parabolic SAR, the same thing with fractals. I'm going to tell us how we are going to use it. You can just insert it now. Okay, the other one, period 60, shift 1, method simple, blah blah blah, apply boom. Then another moving average, which is the last one, 14, shift 0, method exponential, apply to typical price, high low close 3, smooth, blah blah. And that's all. 1 2 3 4 5 6 7 8. 1 2 3 4 5 6 7 8. We have eight indicators to use on our main chart. When we are done with our main chart, later we give us oh my god, I'm going to give us something that is very, very powerful. The indicators we are going to use to support all this, our main chart indicators. Okay, let's go back to the main channel. Okay, this is our main channel. What are we looking for? We are going to backtest, and I'm going to tell us one or two things. Please remember, there is no strategy that is 100%. What makes a strategy to be effective is when you have 80%. 80% is even very powerful. 70% of win more than lose, and that is a profit. Even if you have 55 or 60 or 55, no, if you have 60%, okay. But this strategy, well, I don't want to hype you. You want to come back and tell me how it works. Okay, these are our setup, the one we just made now, the one you screenshot, the one you wrote down. So now let's come here. I'm going to tell us some rules that we have to look into so that we not become a victim of a particular error. Like this trade that I'm taking now. This trade I'm taking now. Actually, that's how it works. But it's also a risk. The reason why it's a risk is because I'm trading against the main trend. Okay, let me just continue. So our entry period. Our entry period is, look at here. Anytime you see the blue, look down, see here. So anytime you see the blue, anytime you see the pink and the yellow moving averages cross over the blue moving average, the blue moving average gets ready to take a trade. I did not say take a trade, I said get ready to do what? To take a trade. Whenever you see them facing opposite direction, crossing the light blue, get ready to take a trade. Get ready. That is the checklist 1. What is our checklist 2? See how this price is jumping. Save journey, my dear. Okay, what is our entry 2? Our entry 2 is when you see the yellow, the pink and the light blue moving average cross this brown at the middle, enter your trade here. Excuse me. Okay, here, see here. So when you see the blue, the pink and the yellow, when you see them cross the brown moving average, enter your first entry. Enter your what? Your first entry. Enter your first entry. When are we entering our? That's why I took this trade here. And mind you, anytime price crosses a particular moving average, it's going to come back to retest it. Are you getting me? It's going to come back to retest it. What will now determine it coming back to retest it will be the distance at which the first, like here. See the retest. Let me look up here. Look up to my 75 index up here. Here. See something like here. See up here. We got ready here. We entered. We're supposed to enter our trade here, but we couldn't enter our trade because when this blue was crossing and the orange, when the blue here was crossing the see, when the blue here was crossing this yellow here, price was not there. Are you getting me? Some people tell you when this thing cross this thing, you just take your trade. No, see, the time this yellow, pink and blue, the time they crossed this yellow, I mean this brown moving average, the price was not there. The price was not there. We know that. Just like here, what is happening here? See, the price got here before the moving average are going to get there. The same thing happened here. Before the moving averages got here, the price was around. Before the moving averages got here, before they cross here. Before they cross here, here, the price was around here. If we use our cross here, we see where the price was. See the cross in here. See the cross. See our blue here. So the price was around here. Yeah. See, the price was around here before they crossed. See, the price was around here before they crossed. It was around here before they crossed. Are you getting me? So when you notice that the price was around there and it's crossing here, you hold on, because it's going to see just what happened there. Where this place that I circled, see what happened there. See that the price actually you see that the price actually retraced that particular place. Okay, sorry, I want us to understand it. So you can see it here. You can see it around there. So the price actually came by. It was not going brum 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 brum. No, the price did some retracement before it continued. So it was it's that particular time it's making its retracement that you enter your trade. I get me. Once you allow it to come down, then you can I use set stop. That's why most of my videos, if I go to my this thing, my running trade, you see set stop and other this thing, because when I see that the retracement has happened, then I place a set stop here, like here on top here. That's where I use the fractal, like here. See the fractals here. Shall you see that? So like here, you see the see the middle of my crochet, you see the fractals here. So I'll just take a set stop here, set stop here too. Are you getting me? So that's, I always zoom out your chart like this so that you not be confused. So let's go back. So I've told you our first entry is when it crosses yellow. The second entry is when the price crosses blue. When it crosses blue, you allow it to trade. See what happened here also. See what happened here also. See retracement. See the first retracement here. Immediately this thing crossed. The price was at the top here when the moving average crossed. So it retraced, then continued. So when the price also crossed this blue, when the price also crossed this, when this blue moving average crossed this yellow, this blue at the middle on top of our brown, the price was around black, so it came back again, boom, retest. You see what I'm saying? So it came back again, retest, then it's going bang 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 bang. So when the price was around there, when the price got to around there, when the price got to here, we're supposed to be our third entry. Our entry one is the first moving average yellow, the second one is moving average blue, the third one is moving average black. Are you getting me? So when it got there, it still came back and retest. So what am I expected to do now that it's retesting? What am I expected to do? See my fractals here. See my fractals here. See my fractals here. This 370654 around there. So that line, see the fractals here, the fractals there. So by the time the price is going to cross this fractal, my parabolic SAR tells me the trend, the current trend that is happening, just like here. See here, just like, see my parabolic SAR here. That dot, that is parabolic SAR. It faces the direction of the trend, and once you get your trend, once you get the trend, like now, by the time it's going to get here, by the time it's going to get on top of my highest parabolic SAR here, my highest fractal here, the parabolic SAR will be on a buy trend. So what I'm expected to do is, I'm expected to come here and take a buy stop, like here, because I know it has already crossed, my blue has already crossed my black. So I'm expected to take a trade, but it came and retest. But because I don't want to find myself in a mess, in case if it's not going to come back to that place again, that is a market for you. So then I enter here. Let me put it around here. Okay, let me just put it around here. So I entered around 370,711. Then I take a buy stop. 370,711. 370,711. I put my stop loss immediately. 370,711. I want to lose $4. I want to lose $4 on this trade. $4 with this lot size. So I've already calculated it that if I want to lose $4, then I will subtract 2,000 from this 300,000 that are here. What am I saying? See, this is my entry period here. 370,711. 370 minus 2,000, that is 368,711. So if my for $1,000, I mean for $1, for what is it called? For $1, I mean if it's 0.001 lot size, I think I'm even teaching another thing entirely, but it's okay. If it's 0.00 lot size, and I want to lose the same price, then I will increase this thing to 4,000. Are you getting me? For $1, for 0.001 lot size, to lose $1, you subtract your entry period with 1,000 naira. Did I just say that? With 1,000. Now I use 2,000 because I'm using 0.002, because 2,000 will be $4 if the trade should go against me. I'm not setting TP now because I like to trade stop. I will explain all those ones later. So I enter my buy stop. So when it gets there, it's going to trigger. See my stop. See where my stop loss is. My stop loss is at a very strategic place. So that is my first entry on my brand. Second entry when my light blue and yellow and pink crosses the blue, and my third entry when my light blue, my red and my pink and my yellow crosses the black. So those are three entries. So now I will now wait to have another entry. My another entry is when this yellow, when this brown crosses the black moving average, like how it is now. When it crosses the black moving average, I'm going to enter my fourth entry. So we are having 4 entries. Are you getting me? We are having how many entries? We are having 4 entries. First one at the bottom, immediately the blue, the pink and the yellow crosses the brown. The second entry is when they cross the blue, and I've told us that it's not immediately that we enter. We wait for retracement. Anyhow the retracement is going to be, we must wait for retracement. So by the time it's retracing, we use the fractal to place our buy stop. The same thing happens for sell direction. And our first entry there, okay, let me use this. So our first entry here, second entry here, third entry here, and the fourth entry will be the one that want to trigger now. This guy crossing here. So once we see that the brand has already crossed the black, we take our fourth entry. Those are the 4 entries we are using. Then after our fourth entry, we watch what is happening. When we take our first entry here, see first, second, third and fourth. So when we take our first entry here, that's 0-1. When we took our first entry, this was already on this is the signal, but you saw where I took the entry, but this is the signal for the first entry. So before we took our second entry, we are already on what's it called? We are already on profit. So the second entry here, the third entry here, and the fourth entry there. Then we watch our trade running. And mind you, whatever thing that will make this brown crosses the black, that means it's going to be a long trade. Once it crosses it successfully, let me use that word. Once it crosses it successfully, that means we are going to have a very long trade. Now you see now that it's making this kind of reversal, this head and shoulder, inverse head and shoulder reversal. See the shoulder here, which is the sign of a buy. See the shoulder here, see the head here, and see another shoulder forming here. So the second shoulder will be a kind of long. The second shoulder will be a kind of long, buy. So that's how that thing to learn. But don't worry, I will teach us all those things. Let us focus on the one we are doing now, because once you get this one straight, you are going to be a profitable trader, and it's going to help you a long way. What makes this trading to be a very cool one is when you have a strategy that is working for you, then the trading can be a fun, and you can have this rest of mind with your trading. Okay, so now let's do our back testing. So I've already mentioned this one already. So we saw what happened there. So we saw what happened here. 1, 2, 3, 4. Are you getting me? So the fourth one is where it's crossed. So and we have a long ride. So the same thing happened here. See, once you see markets doing yanga like this, don't enter it. Calm down, settle yourself. So we have the same thing. The same thing happened there. See here, and see here. So, and we had a very long trade. So that, and before it reversed, the same thing happened up here. We got ready here to take our sell. Here we got ready to take our sell. We took our sell when it's crossed, but it's going to happen around here. Then we took another sell here, then another sell when it's crossed. See, by the time this thing crossed, it's crossed around here. See, if we use this, it's crossed around here. This crossing, the original price was around there. So that's why. So we wait for the retest. See where it retests. Then we took our long. Our sell, something like that. If you have your 3 entries, so you can just calm down. The same thing happened there. The same thing happened around there. So the same thing happened around here. It's happened around there. So around here. Alright, let's back test. See, the same thing happened around here. Same thing happened around here. We got ready. See, it's crossed there. See this kind of thing now. See this kind of thing. See, the retracement was very deep, like too deep. So, thank God I remember. When you want to place your stop loss, you take your stop loss below the dip of the first place we are trying to get ready. The first cross, when they first cross the blue dip, the bottom, that is where you put your stop loss. But mind you, stop loss is going to be on reward. See, let me show an example here. See the example here. See this is not. See the example here. See the example here. See where my stop loss is, the bottom. This one, that's why I like the 2000 points stop loss. It will always be at a strategic place if you have a good entry point. See this one that we set, the pending order that we set. See the stop loss here, it's below. See here. This thing looks like one person with eye and mouth. So see the stop loss here. The stop loss is around where see this thing has triggered. It has triggered. I saw it. It has triggered. So see the stop loss here. The stop loss is below a very sensitive area. So that's the stop loss. Let me check. This thing has triggered. I need see 0.41. So I told you that if I want to upload a trade and the trade is still running, I'm going to upload the trade with a minimum lot size, so that when you want to take your own trade, you will know that the minimum lot size is going to, at least it will do something. You see now, you see the price now that just crossed my entry period, and the two trades are in profit. Kai! Oh! My people, don't worry, you are yet to see anything on this channel. I'm going to bombard you people with big strategy. Well, by the way, let's continue with that. This thing is going to reach somewhere around there. See, because of this particular place, it's going to range. It may not go very smooth like how it wanted to go, but actually it's going to go in, it's going to go in profit. So you can have entered another entry here, because this thing is already crossing, but we don't need that. Two entries are okay. So the back testing, the same thing happened here on the top, the same thing here at the bottom, same thing at the bottom. So, and when you see the opposite thing happening, the opposite of our entry, when you see them happening, you quit the trade and you enter another one. See here, they came to retest. Like here now, you can have, so you can maybe just enter there, open your chart, and you saw this kind of position. You'll be like, let me take a buy. So you took your first buy here. That's why I like using trade stop. Immediately later, I take my buy, I'm in profit. I shift my stop loss in front of my entry. Let me quickly show us that. I want us to learn. I'm sorry. If I'm taking your time, I'm sorry, but just learn this thing. See where my stop loss is now, and my trade is, see, it's in profit, $9. What am I expecting? Okay, so let me show you how to actually keep your money in case if price is going to go against you. So once you see you are in profit, see the buyer, then see my stop loss. I move my stop loss, I move it to the front of my entrance, somewhere around there, and I'm making it very close like this, because I want to write the channel I want to write it very long. So see my entrance here, see my two trades are in profit. See my entrance here, 366716. See my entry period here. See my entry period here, 366716. So that's 366716. So, and I'm on buy. So that means I'm expected to put my stop loss around 3667. No, it's not going to be 7 again. Let me just say 367000. It should be above your entry period. That's how to move your stop. That's what they call trade stop. So you put your stop loss above your entry period, so that if price want to come against you, you will still be in profit, but it's going to be a little profit based on where you put your stop loss. Okay, so then let me make it 368 000. So let's get one. See now, see the stop loss jump from bottom, and now it's at the top. Where I don't like where it is so high, but that's just how to trade stop. That's how to trade your stop. So in case if something like what happened here, like what happened there, if it happened, we took our entry around here. We took our entry around here, it's crossed here, so it's turned back. So we set our, I said the highest, so it's around this place. That's where we set our sell stop, So that's where we sell our sell stop. But the price first, and we put our stop loss here. Are you getting me? So the price first went back and boom, it continued. But in a situation whereby, like here, the price, when we set our set stop, the price already came in our favor. So when it's right in our favor, we are in profit, so we shifted it. But it's just that I've wanted it to write the most important thing, I don't want to load you with did I say junks? I don't want to load you, yes, with junks now. Are you getting me? Because you have to grow into this strategy. By the time you start learning this, and I get to people's feedback, then I will make another video with the other indicator, then some areas you have to avoid. Are you getting me? So that's, by the way, you put your stop loss at the bottom of where the thing turned. Depend on your risk management. Depend on that. So you have to set your stop loss based on your account, based on your balance, so that if you will put your stop loss here and you are entering it at a very high lot size, don't blow your account. So even as small as it is, it can blow your account. So because if you don't use the normal risk management, it can blow your account. So the same thing happens here. Don't forget your 1 minute time frame. The same thing happens here. See this, when you see all this kind you enter through, now you see this one cross. It's not all trade you trade, it's not all trade you enter. You just wait patiently and let everything clear. Like here now, see the moving averages are not together anyhow, like here. Are you getting me? So look at this area, they are separated, but look at this area, they are scattered. So we don't want where it's not to be, this place they are together. So we don't want a case where they are going to be together after a kind of consolidation and blah blah blah. So once you see this kind of that everything is clear, you take your trade, then you ride your trade to wherever you want to ride it to. And this kind of situation, I told us earlier, you put your stop loss. When it comes to your favor, you set your take profit somewhere around that place. So the same thing happens here. See, up here, you get ready around here. You enter your first trade when they cross here, the second trade when they cross here, the third trade when they cross here, and the fourth trade when they cross here. That's this place you get ready. So that place you get ready. So the other place, 1, 2, 3, 4 entries. It may not necessarily always be 4 entries. If you've entered 2 or 3 successful, even 1 or 2 successful trade, just watch it run. Are you getting me? It's not necessary you enter too much trade. It's not even good to enter too much trade. So that's this. You see, I just entered 2 trades. My 2 trades are in profit. So it's not necessary you enter. This strategy has made okay. So the same thing happened around there. See our get ready here. See, everything are together. So if you find this kind of opportunity whereby they are together and they are together like this, and it shows a kind of clear trend, like the last moving average is at the top, the second moving average at the middle, the first moving average down there. You can also take a trade. As long as the last moving average is at the last and the first one is at the bottom. You can also take a trade when you see the price crossing. In fact, it used to be a very sweet trade. See, all those kind of trades used to be a very sweet trade. So the same thing happens here. When you see chaka like this, you calm down, let it settle. So when they settle, see all this places that they are just merged together, you calm down. This is not the moving average supposed to be. It's supposed to be either something like this or something very simple. Are you getting me? So when you see all those kind of things, stay away of the trade. When you saw this kind of thing, stay away. In fact, close your chart and come back later when you see something smooth. Are you getting me? So when you see something smooth, you come back. Okay, that's it. And when you go to 5 minutes, like what I explained earlier, the difference between all these things, the strategy I just gave you now, and big higher time frame, is just the time frame and the time it's going to take to execute. Like 1 minute now, this one is 1 minute, and we are using 1 minute because V75 is a volatile market. Are you getting me? So that's why you use one minute time frame, because you know it can just go pump. You can't compare it with how it's going to run on forex. Are you getting me? So that is why we use one minute. But if you want to use this strategy on like forex and co, you can start from like 15 minutes, 30 minutes, 1 hour. Are you getting me? So that you will gain more this thing. It's not going to be a noisy signal then. So the same thing is on 5 minutes. And mind the all this moving average, especially this blue, this blue and this brown, they don't reprint. Are you getting me? They don't. You see how smooth it is. No price was crossing it. You see. So anything that you make it to reprint, that means the price wants to do something funny. It's either it wants to retest, or it wants to change direction. So that is why we always take the advantage. So that if it wants to retest or it wants to change direction, we will take the advantage on time, just like what I did in my 2 trades that I entered, and you saw the way I entered the trade. So now we go to 5 minutes. In my other video, I will tell us how to balance all these things together, how to balance them, the 5 minutes, the 10 minutes, and all that. Like now, see what the method we used to enter in 1 minute. The method is now set. It's now set on 5 minutes. We've entered on 1 minute. That is a kind of sniper entry. The entry of 1 minute is a sniper entry on 5 minutes, even before it's confirmed. Listen to that again. The entry on 1 minute is a sniper entry on 5 minutes. The confirmed entry on 1 minute is a sniper entry on 5 minutes. Depends on how we enter, even before it's confirmed on 5 minutes. Even before it's confirmed, because here now, if you watch this 5 minutes, if you watch here, this is our get ready stage. But on 1 minute, we've already bought, because it has passed get ready stage on 1 minute. So now around there, we want to take a kind of buy. When this blue crosses, yellow and pink has crossed, they've crossed, then it remains this blue to cross. So once this blue cross, we set our stop, our buy stop around there. So we set it on top of the last fractals. So once we set it there, the price will just, then we keep on riding. If you want to add to the position, if you see that it has, maybe this one now has now crossed this one, this brown has crossed blue, the blue has crossed black, and that means we are going to be somewhere around there. Let me use this thing. That means we are going to be somewhere around there by the time everything is going to cross. That means the buy is already confirmed on 5 minutes. Then we go to 15 minutes. That's another way to enter trades. We are already on profit, so we are not scared. So we go to 15 minutes. You see the entry on 15 minutes. On 15 minutes, it's already an entry on 15 minutes. Are you getting me? It's already an entry on 15 minutes. So we are expecting the price to cross this blue on 15 minutes so that we can enter another trade. And maybe by that time it would have been around there. But you don't need to be doing all those things. You don't need to want to have 2-3 successful trades. Just watch, let them run. Set your trade stop. When you trade stop them, then you can watch them run. The same thing on 30 minutes. You see, on 30 minutes you are preparing to enter another buy trade. Meanwhile, all these points can be your take profit points. They can be your take profit points. I've told you where to stop loss, to put your stop loss. So your take profit also can be, you go to higher time frame. The next moving average on higher time frame is going to be your take profit. So it now depends on where you want your take profits to be. You can put, like now, as you set it, I can set this now. Put my stop loss above, so that when, like, I'm recording this thing at night, so that when it's then daybreak, I won't be at loss. Are you getting me? So I can shift my stop loss above my entry period. Then I can either leave it to run till whatever, or just come here, look at higher time frame, look at the next moving average, then put my take profit there. My take profit can be here, it can be here. So there are some ways I'm going to teach us in my next video, how to take profit, and also how to detect momentum, daily momentum. We trade by daily momentum. How to detect daily momentum in order to have a successful trade. And also I want to give us a particular strategy for free. I will not explain it for now. I want to give us a particular strategy for free before I make my next strategic video. That video is just going to be just going to be for free. How you can set your indicator and put take profit, and put wait, and put strong buy, to know how, when it's strong buy, So I'm going to give us the RSI strategy. We are going to set it with either RSI, or we use our stochastic. I'm going to give us that. So those are the things I have to offer you guys for now. Okay, see, our stop loss, our take profit can be around here. Our take profit can be around here. If our take profit should be around there, that's a very big buy. It's going to be a sweet one. The same time, our take profit around there. 4-hour time frame. On our 4-hour time frame, our take profit can be around here, or around here. So do we see that? So that is how it is, my people. I don't want to bother us. See, I'm in profit. Oh, I'm in profit. So if you believe in this strategy, and if you know that this strategy is going to work well for you, do well, my people, to subscribe. See the head and shoulder, inverse head and shoulder formed. I told us that once it's formed like that, it's going to be a very long buy. Now it's making a long buy. In fact, I can leave this trade for days. The way I'm seeing it, it's going to run for days. If I check my 1 hour, you see my 1 hour, it's already see this long sell. Now it's going on a long buy.
I wish it actually goes on a long buy. If it goes on a long buy, that means this trade, you see my position here, so it's a very good entry on the daily time frame. If it's not going to reprint, if it's just going to go like this, it's a very good entry. I'm going to ride it very well. Like, I'm going to enjoy the ride. So that's it. I'm going to teach us how to use the strategy to swing trade and also to day trade, and also to the one I just told us is just simple scalping. And also you can use it to day trade. But there are some ways, there are some things you have to consider if you want to use it as a swing trade and others. See my daily here. Okay, the one I checked now is 4 hours. See my daily here. So my friends, that's how it works and that's how it is. If you think you've gained one or two things on this channel, please do well to subscribe. Do well to subscribe. Do well to subscribe. Please do well to subscribe. I have many things to offer us, and I know we are going to enjoy it. This strategy I'm giving you for free. It's a paid strategy, but I know many people don't have money to even start this thing, so you can practice this strategy on demo. When you practice it on demo, you will get it right. You will get it right. Then you can just put in a little money. When you put in a little money, then you see what happens. Are you getting me? Not worry, I'm here for you. I'm here for you. I'm here for you. See my price going up higher. All right, guys. So, and don't forget, don't give up on forex. Are you getting me? Don't give up on forex, on trading. Don't bow for trading. Don't bow for trading. Don't bow for trading. Take care. Do well to subscribe to my channel. I have many things to offer you. May God be with you in the name of Jesus. May God open your understanding to receive these things that I have taught you people in the name of Jesus. And may He help you to be a profitable trader. In Jesus' name I've prayed. Amen. Don't bow for trading. Let trading bow for you. Take care. Bye bye.
I cannot bow down before you.